How's it going, everybody? And welcome back to the Market Matters podcast. Here we are back with episode 5.
Episode 5.
Yeah, this is a very special one. As you can see, we've got a tiny bit of a different studio here. We've got the table set up, but it's for a great reason. So today we've actually got our first guest on. So without further ado, here's my co-host, Sam. He'll go ahead and introduce him.
Sam Mower. And as you can see, I have a good-looking young man. Or was a young man at one point. This is Gregg Mower. This is my father. And but yeah, I figure we can get into our market stats first, and then we'll reintroduce him and talk about the market and his perspective. So, do you want to kick us off, Chris?
Yeah, let's do it. So, I just really want to quickly go over the data with you guys. We have some information, more kind of anecdotal, more boots on the ground, which I think is a lot more fun for what we do in our local market, but we'll give you some stats. So as usual, we like to stick to the Sacramento, the Placer, and the El Dorado counties.
That's right.
So we'll go ahead and give you data there. So really quick, right now we are in February, so I believe it's the 21st?
I think it's the 20th.
The 20th.
I think it's the 20th.
Right.
Yep.
So right now we're looking at data for sale. So we're comparing the first 2 weeks of February to the first 2 weeks of January. We've got 1861 for sale.
Oh, that came up.
2240. So we're actually down about 17% on for sale.
Month over month?
Yeah. Month to date. So sold, we've got 575 versus 502, which is up about 15%, 14.5. And then pended, we've got 919 versus 586. So that's up about 57%.
Wow, that's some odd stats.
Yeah. Well, kind of in January, right? It's like the seasonality of it is interesting because obviously that first kind of 2 weeks of January, you've got the New Year's Day and all that. So it's like that makes the data pool a little different, little more something to keep in mind. I guess you've got less people moreover trying to transact right around that time.
Yeah, I agree. Yeah, it's interesting. I think it's just an odd time during the year too. But I mean, I can talk about a little bit about the boots on the ground.
Yeah. Let's get to that stuff because that was really fun.
Yeah, it was fun. Me and Chris actually went out on Saturday and we hit 6 open houses.
About 5, I think.
Yeah,
about 5 or 6. Yeah.
Yeah, we were cut on time. We're trying to get
blur together.
Right. Yeah, but yeah, we hit Rockland and then Sacramento. Very different types of markets. More of a local in terms of Rockland. Sacramento is a larger market with, I would say, more of a buyer pool. But in Rockland, they had 12 to 15 groups go through theirs, and some were pre-approved, some not. One 1031 exchange. The other one that we're going over to Sacramento. We really want to hit those. There was one property. This one was on the market for a while. It was on November. They had multiple price drops, and they had about 3 to 4 open houses done, and on average about 6 groups. So
was that Sacramento?
Yeah, that one was
the one that was kind of near to here. Huh?
Yeah, that was the old one. Remember the converted garage?
Yes. Okay.
Mm-hmm. And then going to 2nd Avenue, getting closer to your house, it's going to be 9. We had 9 to 12 groups, and then 3 to 4 in the last one in Sacramento. So, but the last one, we knew it was overpriced.
Yeah.
And it was actually Mitch, one of our fraternity brothers. He was there and he was talking like, yeah, I know the price is not quite there, but it's got potential. But it's really, I think the biggest thing right now is properties that are priced well within that $400,000 to $600,000 price point are the ones that are actually seeing some traffic coming. I think that's what we're really seeing. And then 650 just starts dropping off.
Yeah, and I mean the thing about that property too is, I mean, it was almost like you said when we walked up to it, it looked almost brand new. Like
right.
It was perfect.
It put like 150,000 in it or something like that. Yeah.
So it was completely dialed, had a really nice big yard for that area too. So it was kind of like, it made sense. It was a fantastic property, but at least in my opinion, it's just, the price
overpriced
there. Yeah.
It seems like, I want to get your take on this because it's been interesting because obviously you don't know which seller you're going to be working with, and some may be more advisable than others, as we know. But to me, it seems like there is buyer traffic, but it's in a smaller demographic in terms of price. what are you seeing, and since I mean you've been around the block for a long time, ebbs and flows of the markets for about 37, 38 years now?
Yeah, quit aging me there, son. But yeah, that's about right.
Yeah. Do you have any opinions on what's going on?
Well, it all falls back to interest rates, basically. I mean, what people could qualify for with a 3% mortgage is a whole lot more than what they can qualify with a 6% mortgage. I mean, it's just simple numbers.
Yeah.
And people's income hasn't gone up as fast as the rates have. It's that simple. So, I mean, if you qualified for an $600,000 mortgage, in the 3% interest rate range, now you're qualifying for a $475,000 mortgage,
right?
In today's rates. So,
and
that's your reason. That's why you're getting that compressing of the prices. I mean, I've seen this before. I mean, it's not my first go round,
right?
So it's just simply interest rates. I mean, that's it. And then we really have to be careful of watching the employment. That's the next big hammer to fall.
Oh, yeah. When's that?
I don't want to be a Debbie Downer, but that's that's what they're trying to do by raising the interest rates to slow the economy down, and
which is a weird thing to think about, but it's the only way to reduce the amount of inflow of cash in the market.
Right.
So Gregg Mower, we didn't really get back into what he's been in the industry for a long time. I kind of hinted in that for, 37 or 38 years? Am I close? Or
I don't know. Since
round up to 40.
1982, as I started in working that summer business, and then graduated in 85, 6. And went right into origination from there, and then the rest is history.
Okay,
right.
So this is where I'm actually going to learn, because I know neighbors, because obviously I was at the age of sort of kind of understanding what's going on. But from start, what was your first, and what led you to where we are now?
Oh. Interesting you should say that. Actually, my first job, I worked for Cal Fed Mortgage, which was a division of the old savings and loans. Now, I don't know, you guys know the history of savings and loans. We weren't around when those things were basically
I was
abolished.
not even born.
So the savings and loan used to be an alternate to the banking system. They had the FSLIC, which was for the federal it would insure the savings and loans, versus the FDIC, which insures banks. So that went kind of defunct in, when was that? Oh, the crash of '89. That was that was when it pretty much went sideways.
Was that Black Monday?
Yeah, 1929 was the first one, but they called it Black Monday.
Yeah.
89 as well too. So that's a lot of history going back there with the different types of stuff. So I worked for Cal Fed. Then I went for a small mortgage banker. Actually, they were a mortgage broker. At the time, I didn't know they were a broker. I thought they were a banker, but it did make a difference. Worked up to branch manager there. And then one of the partners in that company then said, "Hey, Greg, let's start this company." Okay, so we started our little own company called Neighbors Financial. And then from there, we grew that into a full-fledged mortgage bank, and I think we were licensed in 5 different states. We were selling, bulk to.
So how long were you in the career at that point when you started Neighbors?
I started Neighbors. I was 27 years old.
It's pretty awesome.
Yeah.
It's pretty awesome. 25. I got 2 more years left.
Well, it's a lot of thinking, a lot of learning. And in the old days, I didn't even have an internet, so I didn't know how to incorporate or do any of that kind of fun stuff. Yeah, I had a degree in economics and all of that, but they don't teach you that kind of stuff. You got to learn your hard way. Believe me, it's the hard way. And plus, you got to pay attorneys and things like that. Now that I've learned all of that, it's okay, forget the attorneys. I can do all this stuff on my own for the most part. So
right,
yeah,
that's awesome. That not to get too off topic, but I'm curious because I love how you brought that up. Well, how do you feel? Starting off in just an industry in general where you're trying to learn, just back then in that era versus now, the gathering of information, you feel like now it's just way easier than back then? Do you feel like it comes at a cost, or?
That's a very good question. Actually, I think there's too much information that's available. It overwhelms people. People will tend to be more overwhelmed by it because they think they should know it.
We've spoken about this,
and if they try to learn it, you can book read it, But unless you've done it, you don't know what you're doing, as you well know. You know, you at your first real estate contract, you're probably like, help, you know.
Exactly.
Same
Even
thing,
now,
you know.
I seek counsel because it's like I want to do the best I can. But yeah,
We all do. I mean,
it pops up inevitably.
yeah. I mean, I talk all the years I've been doing it, but I still ask all my colleagues because, you know, you can't possibly know it all.
Yeah, no.
You just can't. But technology has changed. Yeah, you can get the information. But in the day when I was just a dumb loan officer on the street and just doing my thing, my manager said, "Hey, Greg, here's your cards. Go get loans." I didn't even know what that meant. Somebody said, "Hey,"
get 'em. Yeah.
somebody said, "Fill out the 1003," and I said, "What the heck's a 1003? I don't know what the hell that is."
Go assign some debts.
So
You're like, well, it's 10 a.m. right now. Does that mean that we've got 3 minutes?
yeah. So then they said, "Okay, kid, go out and just call on real estate offices. Just say, hi, how you doing? I want to get loans from you." Okay. Out I went with my cards, putting them on David's desk, talking to people, didn't know what I was talking about. In the day, a realtor would ask me, because the rates were fixed then. The government rates were fixed.
Right.
So they didn't ask what your rates were. They would ask, "Hey, what's your points on an FHA or VA loan? What's your points?"
That's entirely
because it was
different.
the rates were fixed. Say when at that time it was fixed, I think at 12%.
Sure.
In the early 80s, and points were probably 5 to 10. And that was, but that was average. That was average. You got to understand too the loan amounts. The loan amount, the FHA loan limit when I first started in the business was $60,000. Then it moved to 90, and that was a big deal in the Sacramento area.
Right.
So yeah, I'm showing my age big time, but it was a different
We're way past that
game
now.
back then.
Right.
Yeah. So you just had to learn your stuff slowly as you went along.
Right.
And from word of mouth and from underwriting, from the people that were higher up. If you didn't listen to your superiors, then you didn't learn, and that's pretty much how we did
More
it.
experiential, you'd say, and probably more focused, like you mentioned, where it's like you just, in a way, when all the extra cluttered information, like you mentioned, isn't on your radar, it's probably easier to just like, okay, well, let's just keep learning this.
I feel like the best way to learn always is by doing it.
Yeah.
And I feel like with Google, because I've had to deal with this with clients, and I'm sure you've had to deal with it too, is that no matter how you search it, you can always find a way to be right if you type it in the right way on Google. Like if I were to type in, like, I watched a video and this is how it brought up to me. It's like, does coffee make your eyesight better? And there's a popped up article, and then it says coffee.
design, the question is-
and then
yeah.
this next question was, coffee causes blindness? Question mark. First article. Why coffee can possibly cause blindness? It's like,
You're like, what?
what is this? Can you imagine if someone was looking up mortgage rates or loan programs? It's like, but they say you can do this. Like, well, unfortunately, like for instance, I am actually trying to help another agent trying to find a teacher loan program. They're few and far between. And I've reached out to a ton, and there's like hardly any. But on Google, that makes it sound like they're in such abundance.
Yeah, they're everywhere.
They're everywhere. But it's tough. And I think that's another thing that our industry is kind of working through, because it's like a constant struggle. Like, bro, he told me this. I also saw this. What's going on? Why am I not getting that? Because I've had that multiple times with rates specifically. And a lot of the time that's bank lending rates, or
Like I saw over here, this number.
yeah, or like the base Fed rates. Like, why am I not getting that rate? Well, how do you think lenders make money? You're going to go to the federal government, Federal Reserve, and like, so I need a home loan for my $200,000 property in Tennessee. They would say, talk to your local mortgage broker. Yeah, it's so.
Can I get that just for free? Yeah, 0%.
Yeah, zero. Yeah,
All that money.
but yeah, all right. So we were at Neighbors.
Yep.
How many employees did you have that your highest?
I got up to 250.
Wow.
Yeah.
Wow. So how many doc drawers? How many underwriters? How many processors?
We had 2-3 underwriters. I don't know how many processors we had, because we had them in branches. I think we had like 10 branches or so at one point in time. And
You had 10 branches? I didn't even know that.
well, yeah, in the day, branches were different because you had to have brick and mortar. Nowadays, you don't really have to have brick and
some
mortar,
states do,
especially
some
since
states
this
don't.
pandemic. It's all cool to be
At home.
virtual or whatnot.
Yeah.
So
Yeah.
but that was the day, So we had it was just a different game. And it's funny because we started the company, we didn't have a computer. Like I said, the IBM's electric typewriter is what a processor did. They typed out everything. They had to typewrite a 1003, and if the 1003 had more than 3 whiteouts on it, start over, that kind of a thing.
Wow,
So,
brutal.
so when you were hiring a processor, you were actually hiring a typist, and you would have them sit down at a typewriter and take a typing test and see how fast they could go.
Wow.
Nowadays, it's like, oh, do you know Fannie Mae guidelines? You know Freddie Mac guidelines? You know FHA, VA? You know,
Right.
Because
the technology can kind of self-serve. Anyone can plug in and be user-friendly. Yeah, yeah.
and everything auto-populates and everything else now. So, I mean, and then, of course, you hit print, your 1003 goes, out it comes, you know? I mean, in the day, though, when was it? It was like 1990. I think I brought my home computer into the office, and my partner looked at me at the time and goes, Mower? What the hell we need that for? And I hit print, and out came the 1003, and it was the old daisy wheel printer. I don't know if you know what that is, but they used to go, and it literally, the paper would come out like this, going, and it would come out, and the whole loan application was printed. And then you turn it over and do the backside. And
you're
I
like,
go,
that's
why we need it. That's why we need a computer.
Such a mic drop moment.
Yeah,
right.
Print, bitch.
A print button moment. Yeah.
Well, that computer, it was the fastest computer on the market. 80 megabyte hard drive. Megabyte hard drive. Yes.
Our producers is like, hey, shit.
Yes. So, anyways, I digress hard. But, I mean, technology has really helped, but it's also hindered an awful lot, too. I mean, we're no faster. You would think we'd be faster, you know, having all this technology. You know, you instantly, you know, you should be able to qualify somebody like that. Put their name and their social security number, and we should be able to get their job. We should get this and all this. All the stuff you just go auto-populate, and we just have an approval. Just like that, you would think, oh, no, we still have to manually go get all that stuff.
Right.
You know, whether it's electronic. And then we have to figure out, okay, is your employer an electronic employer, or do you have to do it by hand? So we have to kind of figure all that out as we're going along. We don't know when we first talk to a client. You know, you pretty much know if they work for the state, because you have the certain state things you have to go through to get their verification of employment. So, but yeah, it's really not changed the time frames any faster, which we always thought.
Interesting. Yeah, you'd think it would, like...
Close times have, though. Close times have definitely improved, though. You mean, wasn't your first FHA loan took like 6 months?
Yes. That was way back there. It was when in the early 80s, it would take 6 months to get an appraisal. Because remember, we were coming back. We were I entered this business in what, 85, and it was a refinance boom. It was a refinance boom, and everyone was refinancing from 16 to 12% interest rate.
Happy as can be.
That's
probably.
a fact.
Yes.
And then we took them down the ladder, and we said anything at 10% is like the perfect rate. Anyone have 10% is the perfect interest rate. And now today we look at, I talk to some of my old buddies in the business, and they look at me and go, remember you used to say that? And they said, yeah, well, no one's going to understand that in today's world. It's like we're talking a completely different language. So.
Right. People are reeling over 6 right now.
Yeah.
It's like,
Yeah. I mean, it's going to be, you have your loan amounts are going to be higher, 6.5, maybe. It's still, it's understandable, but we've just been used to it for so long. So I understand where people are coming from. Yes. However, but.
Well, you got into the refinance business, boom time.
Yeah, but I got into it when I was just starting. So as you know, it takes time to build business. So all the people who are doing the refinances, the majority of them have already returned clients from the purchase they did back a few years back.
Oh, yeah.
So it's like I was trying to grab the people that are like, I want to work with a local family mortgage broker. It's like, I can help you with that. And that's how I literally learned, was for my few. The first ever loan that I did was, I think it was up in Cool, and took about 3 months to do, because it was in the boonies. Appraisal took forever. That was when appraisal times were. Yeah. And we got it closed, and my first paycheck was a nice, cool $500.
Hey.
But man, I learned so much in just that one transaction. And
I would have loved to have a $500 first paycheck. And I think I would have died and went to heaven.
Well, you think of like just like a full-time biweekly. That's
my
not
commission
much.
was 50 bips. 50 basis points on the loan amount.
Explain that.
And then my average loan amount was maybe $50,000.
Explain bips.
Bips is basically 50. It's 0.5%.
Yeah.
Okay. It's 0.5% of the loan amount. So that's $250 I would make on the loan. You know, if we had $100,000 loan, it was like a jumbo loan. We were, oh my God.
I know. What
Got 100K.
It's this big loan.
hitting the 6 digits. Yeah, you're like, whoa.
Yeah.
Going on top of the world.
Yeah. It just different times. It's just, you talk about inflation, and it's just the way it goes.
Yeah.
You know?
Yeah. That's that's another problem too, especially right now, is that with inflation, it's reducing a lot of people's how much actual savings, because the cost of goods are going higher, so their savings are going lower as their salary's not increasing. It's just like, so for the fact that they're actually sending actual more government money to you to help combat inflation is beyond me. It's literally the biggest hypocrisy that you could possibly do.
Well, God forbid they should lower the gas tax. Oh, no, that would be sinister. We don't want to do that. We never go backwards. Governments never contract. You never see anything go backwards. You always see government going forward. More. There's nothing ever in my history of my life. I've never seen government go back in any way, shape, or form.
They'll go, okay, we got what we needed. We're gonna resend that. We're gonna
Run it back.
Yeah,
we're feeling good now.
Doesn't matter which side of the fence you're on. It's
No.
Well, getting back on, so you had neighbors and you had about 250 at the top. Do you sell the business or you sell the building, or you sell both at one point?
well, I sold the business to my partner, and then we sold the building.
Okay.
So yeah, because we were smart enough to buy the building that we were gonna.
Yes.
Yeah.
That was my next question. Is I'm sure you were real estate savvy enough to own the building too. Yeah.
We owned, it was 13th and 1314 H Street. We owned that building.
Downtown. Yeah. And you did the Forest Hill down to.
When I first did it, yeah. Well, that was when I first started Neighbors, though. We were out on J Street. We were always downtown.
Okay.
We were on J Street, like 40th and J, out that way. And then we came down to P Street, and then we bought the H Street property.
Okay.
Yeah, we started that business in 90.
I try and remember that when I was younger, but things are just blurry at some points.
Yeah. Well, how would you? You were a kid. You were more worried about, we're going to play baseball or something tonight,
Well, I did know to tell my friends, though, like, what's your dad do?
He's like, hey, Dad, what are the rates?
You could have cared less.
Yeah, what's the Fed funds rate out
It
there?
would have been more, hey, Dad, can we go out to dinner tonight? Or can we do this? Can I get chicken nuggets and fries?
Right, yeah. A little bit different priorities at the time. So you got done there. That was the end of that era. And then you kind of bounced around a bit after that, right? And then settled in where we are now.
Pretty much, yeah. I mean, I looked at the business, and I at the time in 2010, I sold the business in 2008. I kind of floundered, went to another banker, took my crew with them, my underwriters, my doctors, my funders, and I kind of split the company up when I sold it to my partner. But I committed. I went to work for this one company who will remain nameless, Guild. That they basically went down this road, and when you know more than the people that are trying to, govern you, so to speak, it's a difficult.
Your bosses or your superiors.
It's a very difficult thing when you tell them, well, if you did this and this, you could get that loan sold this way, and they look at you like, that's not your job. Let me do my job. Just trying to help. It's what I've done my entire life. Close loans, sell loans, move the product. That's what you do. But yeah, in those days, I just realized after bouncing to 3, even my buddy Kurt Reisig at APMC went to work there, and their model was different, and it was something that wasn't my model, so I couldn't work under that model, and it was just like I just need to be my own guy. I know how it works for me. I know what the business requires, and man, the rest was history from there. And then we realized in 2010 that the DRE changed the laws with mortgage brokering and real estate sales. Before, you used to not be able to really do both, the real estate and the loans.
Really? Okay,
Yeah.
That's interesting.
So nowadays you can. If you held an NMLS license and a real estate license, you could sell and do loans. But you want to basically keep that separated to people to do the right job. If you're going to do it right, you're going to be 100% into the real estate, or you're going to be 100% into the loan.
Right.
If you're doing both, half-assed. So,
Yes.
so you can do it. And like if he's working with a buddy, like a fraternity brother or something like that, and says, "Hey, I want to buy a house. I found this house and
I'll move it through you.
Yeah.
Yeah, there's only a few instances, like very rare. I've only done it once with a buddy of mine. It's like, do you mind just doing it?
It was a fraternity brother. I mean, yeah,
literally.
Sure.
So yeah, bingo. I could do it, but I don't even want to do it. I don't.
It's a pain. It's a big pain in the ass to do it by
my wife
yourself.
sells real estate, so I let her do that stuff.
Right.
My son does loans. Let him do that stuff. I need to do compliance and counting and all that kind of fun stuff. So
Right.
so I'll stick in my lane over there right now. So
Okay, so we're back in.
Focus help.
I'm sorry, I took it out of the realm.
No, you're
good.
it's totally fine. So, as I know, obviously, we're a mortgage brokerage. What led you to think that was your? Well, I know it is, but I want to hear from you why that was the best business model for you to do on your own again. What was the underlying reasons? Maybe it be rates or options or boutique level type of service or.
Well, being a broker is just a natural. I mean, when you're a loan originator, you want to have all the tools in your toolbox. You know, if you just have 4 or 5 tools, you're not going to be able to fix the entire car. If you've got the entire workshop, that's really what a mortgage broker is compared to like a mortgage banker. They're limited. They want to do the product that they are going to sell into the secondary. You know, their FHA, their VA, their conventional, whatever their model is. Every company has a different model on what type of loans they want to originate or they want to buy wholesale. And from our perspective as a broker, we know who those people are. Okay, so we're going to go over here and use Plaza for our government stuff because they can underwrite it correctly. We're going to use UWM for the conventional 30-year fixed cookie cutter 800 FICO score kind of product. We're going to use ABC for the subprime stuff. We're going to, you can do the whole gamut. In fact, you can even get over to the private money.
No
stuff
subprime anymore. I think they just rolled off the tongue, but
Alt A, whatever you're calling it nowadays, they still have that stuff. The bank statement,
bank
garbage,
statement loans, the
it's-
DSCR. I've talked about it with you, but yeah, they're kind of they're just
The
different.
bank statement loans, it's just a way to get around that 43% law that really went into place in 2008 through the Dodd-Frank Act that says you must qualify everyone with no higher than a 43 back-end debt-to-income ratio, which is it's
kinda
a
lost
pie in the
and
sky.
forgotten a
I mean, I
little
don't. Most government loans are, we push closer to 50,
Right.
or more.
Or
Just
55 with FHA or with VA. Like,
To say that seems
Yeah.
pretty low, especially for certain.
Yeah, but 43, that is, if you look it up, that's the actual law that all lenders have to go by. And so that's why they came up with the bank statement stuff is so, people that are self-employed, you look at their tax returns and what does every red-blooded American do? They don't want to pay the government. They'd rather pay themselves. So they write everything off.
Yes.
And their net income, the part we have to use to qualify, is a lot less. So the bank statement loans, we now can utilize, okay, what's their deposits been for the last 12 months?
Sure.
So if their deposits average $10,000 a month, that's the income I can use. But if they only showed income on their tax return as $2,000 a month, I can use the higher of the two. So that's why the bank statement loans, in theory, came around.
yeah, bank statement loans are interesting because it's like it's per type of like how much they use in terms of deposits and their ratio, if you will, is they factor it based on the type of employment you have. Like say, for instance, I was doing a bank statement loan as a loan officer. My expense factor may be a lot less than say like a construction worker with heavy equipment with like leases, owns land to be able to hold it there, stuff like that. So it's interesting, but the rates are a little bit higher. And yeah, it's just to get around what he was talking about.
It's just really a really clumsy loan.
Yeah. I mean, you just got to
just dead to rights. 43% has to be this. It's like I'm sure there's plenty of cases where you've run into where it's just like
there's
barely not.
Well, I mean, you look at somebody that, they're self-employed and have been self-employed forever. And they could be running anything from, an AM, PM to a, multinational corporation. But their personal tax returns, they write everything off. And so it's not as high as it is. But then you look at their bank statements and they got good cash reserves. And they managed to save all this money. If you look at the big picture of the guy, person can afford the payment. You can see it in their financials.
Right.
But you can't put it into the numbers through their tax return.
Right.
So that's why that came around. We used to have what was called stated income loans, and those were originally designed just for those types of people that had really good credit, really good
was the
asset,
original
and they
reason.
could put 20% or more down, and they would say, okay, they'd just basically turn their head and say they're approved, go for it.
Right.
They can't do that nowadays.
Right.
So
I feel like in some cases it could be, you could look at logic, but unfortunately if that doesn't apply to everyone. That's why subprime happened the way it did, was like, I feel like it made sense for some people. Like for instance, I had a guy that had his tax returns look pretty rough. It was maybe under 20K, but his deposits were close to 200K a month. So it's just someone that understands how to utilize debt and then also be able to translate that over their tax returns, because
Right.
I mean, at the end of the day, I can talk about debt all day long and how you can utilize that in your taxes, but people know how to use their money wisely and then be able to translate that over to their taxes so they don't have to pay it. They're going back into themselves.
Right.
Yeah. So, but it sucks because unfortunately
Those products were around in the early 2000s from about 98 till 2006.
Unfortunately, too many were written.
It was the subprime stuff. The problem is it originally came out with the right intention. We talked about this a little earlier. It had the right intention,
Right.
to help those types of people.
But
Then it just went skewed to where, now then Wall Street basically got involved and said, oh, you know what? We want you. Actually, George Bush Sr. first said that I want you guys to get the less fortunate people into housing.
Wasn't that like a
At
bill
whatever
or something?
cost.
Like an executive order that he did? It was like
It was kind of, I really don't know the details of the thing entirely, but it was basically the Community Reinvestment Act.
Okay.
You can look the history of that thing up and you'll see that that's where it started. And it just went like everything does. Wall Street got a hold of that and started skewing things. And well, then they realized that they could sell bets on bets on bets on
This is where it
bets.
gets interesting.
And then that's where the whole thing fell apart. It's like, okay, like I'm gonna buy that pen from you.
okay.
Okay, I'm going to buy that pen from you. But you know what? That's a nice pen. You know what? I'm going to sell a piece of that pen to you, Sam. I bought it from him from $100,000. I'll discount to you, give it to $98,000. And then, then he's going to buy it from you for $95,000. And now you've got one pen that was worth $100. Now it's worth $300. It's not sustainable.
Yeah.
That's what
That's
happened.
on that.
And then when some genius looked at the thing, well, it didn't take much of a genius because I could see it writing on the wall.
Yeah.
And I looked at it and I go, oh my God, this thing's going to fall apart like a house of cards.
Yeah.
And at that point, I was doing the subprime stuff as a mortgage banker. I was funding it on my warehouse line and all that stuff. And I said, stop, hold the bus. The shit's about ready to hit the fan. So I backed all of it out. Turned out I had a third party origination, which is wholesale. I did that. And then I had, we were doing the subprime. I told all my loan officers at the time, I said, you know what, guys, we're no longer funding this. They all went, what? No.
Wow.
Yeah, and
You saw that product was going to create essentially what 2008 was.
it was going to
that's what it
was
was.
going to inevitably put us out of business because as a banker, we signed that if the loan goes bad on the first payment or the first 6 months, you have to buy that loan back.
Right.
The whole principal amount. So
Right.
So I'm looking at it going, I don't want to be buying, all these loans back.
Yeah.
So I stopped doing it in 06 it was, and then by 08 the whole thing hit the fan. But I mean, but what I told the loan officers at the time, I said, broker it out. There's plenty of companies that are selling this stuff wholesale. And it was just as easy. They were making just as much money because there was no cap on the amount of income that a loan officer could make. And there was no licensing requirement
That's
at the
another
time
thing.
either.
There was never
So-
a cap on how much they can make per loan, which is wild.
One day you're a shoe salesman, next minute you're a loan officer. That's where that business was in the day.
Wow.
That's how when I say, he says 250 loan officers, and I go, oh, yeah, that's great. But no, maybe 10% out of those are real true professionals,
Right,
So,
right.
because, the old 80-20 rule, 20% of the people do 80% of the business. And that pretty much falls in any, it's probably gotten even worse. It's probably 90-10 now. But yeah,
I would say that's pretty close.
but
yeah, that's
productivity and people have gone down considerably. But
I would say so.
You got to work hard. But that's the reality of what happened back then. But I could go on for that topic for days because
I was good.
I was right in the middle of that thing.
That's extremely cool. Like that's interesting to me.
Remember we're talking about The Big Short?
Yeah. I
So-
mean, you had almost a piece of history to that leading up to that. Yeah.
Do you remember, have you seen that movie? It's been a little while, I think
Yeah,
you told me.
yeah.
So the Las Vegas convention,
No, it was Denver,
it was Denver?
Colorado. I
Is that-
remember it clearly.
Was that,
yes.
was that your situation?
No, it was actually the same clip in the Big Short where
So-
it was Steve Carell's talking to a guy from it was either Morgan Stanley or
Who was it?
what was the other one that went?
It was
belly
Morgan.
up?
I think it was, he represented the investor. Do you remember that?
But anyways, and these guys are talking
think it was
tranches
worse.
and all this technical talk, and I've been around the block a few times. My dad was in the business. He started in 1960. He was a full mortgage banker. He went through the whole mortgage-backed security section when those things came around. But
Generational.
so I got the ability to talk to him and get a lot of knowledge about how the business works on the other side of the fence, the servicing side. So when I'm asking the questions of these guys are all salespeople thinking the origination side. They're not thinking the backside. What happens after that loan closes? They all want that stuff, that paper right now.
Right.
They need to feed the beast.
Commission.
They need to feed the beast because that paper is what they were selling. That's what they were selling the bets on, was that paper.
Watch The Big Short. They
Yeah.
explain this very well. I think you'll agree. They explain it really, really well.
It was very good. They had this analogy where they're sitting at the poker table.
A great analogy.
And they're playing poker, right? And then there's a guy behind him and says, "Hey, I'll bet that he wins." And then there's a guy behind him, "I bet that he wins. I bet that." And then it was like
Bets
this
on bets
chain.
on bets on bets.
Yeah.
Wow.
It was, and that's what Wall Street was doing. There was also a lot of fraud too, because they were looking at this paper and they were going into the places that actually rate the mortgage pools.
Based on quality.
Yeah. And they were going in there and they were telling them that this is a AAA pool and then bribing them. And then they were
Financially
getting,
incentivized.
they were getting crap paper rated at AAA. And that's,
Which is the highest. Like,
Yeah.
It's pretty much the safest form of a mortgage-backed security that you could buy as an investor.
Sure.
it's like, which would you rather buy if you're an investor? If you had all the money in the world, would you rather buy a 30-year fixed rate note that the guy qualified for? Or would you rather buy an ARM that's going to jump up and get negative amortization on it? They're going to end up owing more than they're worth. Now, which one would you rather buy? I got to make as a secondary marketing guy, I got to make both of those look attractive to Wall Street. That's what these people did. So that was this big smoke and mirror thing, and it cost everybody. I mean, it really cost everybody. And I remember there's a scene with Steve Carell talking with this guy from, I think it was Lehman Brothers. But
It was Lehman Brothers.
because I had the same conversation with him. I literally, there was this guy, I can picture this clearly, looking at him, talking to him. So tell me, forget all this origination upfront stuff. On the backside, you guys are selling this to Wall Street, right? You guys are putting it into these pools. And explain to me how this is good.
Yeah.
Good paper. How is this good? I mean, these people, you saw The Big Short. We were literally giving loans to strippers saying they're making $20,000 a month.
Right.
I'm sure some strippers could, but, it'd be really good. And maybe, do
Not
things on the side.
Bakersfield to
but nonetheless.
day shift
80/20 equal to
strippers.
strippers too.
Yeah, I'm sure. Yeah.
Las Vegas strippers make bank.
Yeah.
Bang.
But Florida strippers or California strippers, not so much.
Strippers aren't where it's at.
Galt stripper. The day shift Galt strippers.
I remember talking to people and go, "How many properties do you have?" They would say, "I've got like 5-6 properties." I'm like, 5-6 properties.
How?
Exactly. And I know what they do for a living. I'm going, oh my.
You're dumb.
And of course, all those people I knew that had the 4 or 5 properties, now they lost it all. And then they lost their marriages and everything else came of that. So, everyone was looking at me, pushing me to buy. And I'm like, no, I'm going to do the opposite. While everyone else is doing this, I'm going to save, put it in the bank. They'll buy it when it falls apart. And that's what I did, was when it did fall apart.
So that's where I get that from.
Yeah,
from you.
I know. It's overly conservative monetarily brain cells that you've inherited.
Well, that's why you've been here for so long, right?
Well, hey, that's incredible how that saved you and that, that piece of, essentially at this point, it's an American history, right? Everyone knows. You say 2008, everyone knows what you're talking about. So it's just kind of like, that's wow. To see that, to be plugged into the industry and kind of see that in the horizon, that's impressive. Yeah.
Well, when you're in it and you know it,
yeah,
and of course my economics background, I can kind of see what's going to happen going down the road just by if that then this, if that then this. It's kind of a
seeing the different
Right.
pathways. If this happens and that happens, yeah.
The only problem is the trend is the only thing that you can't really predict is the way people think about something.
Right.
That's the big thing.
Right.
I knew when the rates would go up. The rates went up too much, too late. They should have eased that on us a little quicker,
I
a
agree.
little earlier on, because I was saying,
Probably like September, August.
Because you knew the psychological of it would.
no, I just
fact, yeah.
I just knew the where it was headed.
Yeah.
Then I knew the cycle. Then the Fed always overcorrects. This whole fighting inflation with interest rates came about from Paul Volcker in the early 80s. That's when I started. I started listening to, them speak and how, he was the Fed Reserve Chair and how they posture. We always had to figure out, how are they posturing? Nowadays, everyone knows what the Fed's going to raise the rate 0.25%. The Fed's going to raise the rate 0.5%. They pretty much know now. So Wall Street has a few weeks to react to it. So in the day, we had to kind of think, okay, what type of person is it? Because we didn't have the internet, we didn't have all that. We had to take a look at what the raw economic data was around us. We had to actually believe it. Now I'm having a tough time believing some of the stuff they throw at us, economic news and stuff like that. I'm having a real trust problem because I'm not seeing the same stuff that they are, and I'm on the streets just like you and me. You know it that people aren't burning up our doors right now to get to buy real estate.
Yeah.
Why? Because we have high interest rates. Why? Because they raised the rates to fight inflation. Why? It's because the government put too many dollars into the market. Why? So they could keep control of the people. Why? You keep going back. Follow that money. Yeah. Follow the dollar all the way back to the origination source. And, I don't care what side of the fence you sit on. Again, it's just follow the money.
Yeah.
And 9 out of 10
like that. Yeah.
Both sides. It doesn't matter what side of the fence you're sitting on. I swear to God, it's just the same thing. So if you get to that point and you can disassociate yourself from the noise, you can kind of get an idea what's going to happen down the future. Right now, there's so much noise. It's an incredible amount of noise. I've never seen the noise ever. I try to keep up to date on all this stuff. We're going to have a war in Ukraine. We're going to fight Russia. We're going to bomb China.
Taiwan
every
is it
time
next?
In the 90s, when we went to war with Iraq in the 90s, our interest rates went down. Why? Because we had this money was going elsewhere. It wasn't a ton of money at the time. At least we didn't know it was because it wasn't really
Publicized,
but evidently it was like 10 times more than what we were actually told.
Wow.
But the rates went down.
War's a business.
Yeah, well, no, because people weren't going to buy. Our local economy wasn't going to be stimulated because people are going to go to war and this and that and so forth. So it was a different time. And now if they mention war and rates just go, whatever. Wall Street goes, whatever.
I was going to say, I was expecting something to happen, but nothing really did, which was interesting to me.
Yeah, I don't know. It's why it makes it real difficult to, if you're looking at the real data that runs the show around the markets, that's what I try to look at and see what's going to happen tomorrow.
Right.
Are you going to have a good year this year as real estate sales? Are you going to have a good one as a loan officer? I hope you both have great years. How are we going to get there? I have to look at it from a different perspective. I look at it looking backwards, kind of knowing where it's going and what you guys should be doing as a group. I think what you're doing right now is absolutely perfect. It's called energy. Keep that energy up. It's intoxicating. People love that. Someone like myself, if I see a salesperson who's young and energetic and ready to go for it and fight the fight for me, that's my guy or gal. Right. I don't care which one it is. They just got to show me that enthusiasm. I'm all over it. Yeah, it's because I'm a typical consumer.
Yeah.
We don't have customer service anymore. You go to a nice
dying.
restaurant, you sit down, and what does the server do? Server comes up and says, how can I help you? What would you like to eat today? And of course, you kind of go through your thing. And, in the day, they would come back, they would give you coffee. It was It was that service level from that level. I used to love to hire servers as loan officers and train them because they
had that element already.
Yeah, there's two things people really get uptight about. They get uptight about their money. They get uptight about their food. Their food's not coming in time, or if it's cooked wrong.
Point.
People are very particular about this stuff, right? Yeah. So, and if the server can handle that, they can handle the person that's, hey, why is it taking so long to get my appraisal on my house or something like that? You see what I'm saying?
Right.
So they can overcome those objections a lot easier and a lot quicker. So.
I think that's why I like Chick-fil-A and In-N-Out so much, because their service is just so good. No, but we were telling me though that you would
that's not service. That's like, what's your order? Okay, here you go. Here's your chicken and fries. Great.
Hey, they're good people.
You just proved my point.
Right.
Hey, that Chick-fil-A
You don't know what good
moving.
service is. And when you see it, it's kind of intoxicating. That was my point. You proved it perfectly right down the road there.
I'm glad I could prove your point. I'm a fan.
So, anyways, I know we've got off topic a little bit, but
That's okay.
No.
We're looking to just have conversation, so it's actually exactly what we're trying to do.
No, yeah.
Funny thing about these podcasts, being off topic is in a weird way on topic.
Yeah, I agree.
Sometimes, but we do have some points to keep us going. Of
Yeah.
course. Yeah.
I mean, I was just going to ask you. So I don't think I was trying to guide you into something, but
just ask it.
so, so I guess my question was, I guess you answered it about the broker aspect of like why, but for the class, because I try and tell people, especially just because it's an interest rate driven environment, everyone's trying to get the best pricing out there. So what makes us different than a direct lender or a bank? Why would our rates vary between the three?
I'll give it the most simplistic terms.
I love that.
We go in the back door of a bank when the deal's already been done. We got the appraisal, we've got the credit report, we've got all the supporting documents of a file. Then we give it to the underwriter direct. We're paying for the origination side of it. Whereas a bank will give us a better interest rate because they're not having to pay a loan officer's commission. They don't have to pay the processor. They don't have to pay the receptionist. They don't have to pay for all the computers and all the staffing and all the stuff that's involved with
You say bank or
originating
broker?
loans. So we bring a loan into them, and they'll buy that because it's done by a professional. It goes right to the underwriter as opposed to all the other steps. We do all the steps locally, so it's cheaper. So we get what's called a wholesale interest rate, which is cheaper than
A broker.
a retail rate. So in other words, if say we go into a bank, any bank, and you as a consumer go in the bank and you talk to a retail loan officer. The retail loan officer says, "Hey, this is your interest rates. It's 6% with 2 points today." Okay, and then they come to us and we get we go to the same bank and we go in the back door and we ask them, "What's your interest rate today?" Well, at 6%, we're going to give you a point back. Okay, so what I do is I then, in order to make 2% or 2.5%, I'll say to the client, it's one point. Okay. It's 2 points from the retail loan officer at the same rate, 1 point from me. Why? I went in the back door and I'm saving you money. I'm still making money. We're all winning. It's a win-win-win situation. And that's the idea. That's why the brokers are, and I have more product. I can go into all the different banks on a wholesale level. I can go into alternate banks, which are not banks, which are hedge funds or insurance companies or things like that offer different product, like these bank statement loans and whatnot. So
I love that aspect. I think my favorite part is there's been times where someone, maybe talked to another broker, like, "Hey, there's this cool product at the XYZ lending wholesale. And you got to look into it. I can get approved and partnered up with them that day. And versus I don't have to stay within this small matrix of loan programs. So it's like, oh, I'm not set up with them. Let me go get set up with them. I get their rate sheets. I get their portal. Like, it's like boom, boom.
Right.
So it's just,
there. Yeah.
it's just like, I love providing that one-stop shop. It's like, I got it.
Yeah.
If I don't, I'll find it.
Yeah. And I can go get it.
Yeah, exactly.
or find the gimmick that they're saying, because half the times the loan officers don't understand the product and they throw it out there anyways. And it's like, you get this fervor and then they realize, oh, it's really not there.
Yeah. Yeah.
There's a lot of that in our industry, unfortunately.
You got to sift through.
There are a lot of gimmicks, especially when the market decided to go trending downward. The scammers came out, the rates being posted, which, like, I don't know how some of these people are getting away with what they're like. The other day I saw an ad for like 3.5% interest rate at like 1 point. I'm like, how is this not being flagged?
You're gonna get the bait and switchers. You're gonna get the fraudsters.
That's why I'm afraid about online lenders, because I've heard some rough stories, especially when it was refinance time or when rates were moving up.
Well, if you do your business honest and ethically, it's gonna stick with you.
Yeah.
You do the business the right way, it's going to stick with you. It's going to come back. The people that are doing it bad, they're going to get theirs. It's all, I don't know if you want to call it karma. You can call it whatever you want. It's going to come around. I've seen it 1,000 times. I mean, we had this guy in town in the late 80s, and he was just baiting and switching everybody. He had billboards. He had radio commercials, everything. Just
wow.
We were at 7%. He was at 6%. And he'd get people all the way up to the closing table, and they thought they were getting their 6%. And they would sit down and look at the actual stuff, and they're at 7%, like they would have gotten anywhere else. And
wow.
And now there's like, well, you got to take it now. So what? It's either, if you don't take it with us, and you got to go through the whole process again with
that is messed up
with XYZ over there. So that's how you can bait and switch somebody. And that happens in our business.
He's probably not in the business anymore.
No, actually, we ran him out of town when I was the president of the local California Association of Mortgage Broker.
Good. Screw him.
We ganged up on him, and he actually moved to the Bay Area, and he started screwing the Bay Area people up. But yeah, so
Jeez. Yeah, I don't know.
he lost his broker's license. We got his broker's license revoked, but he ended up using his mother's broker's license.
That's
So,
it goes to
I
show
mean,
you what kind of person he
The
may
the business is, it's self-policing a lot of ways because, let's face it, the DRE, their hands are tied.
Yeah.
The business oversight or whatever, whoever's regulating the bankers now, they don't know up from down. They don't even have a place to call home. So, you're going to see a lot of fraud and a lot of bad stuff going on in this business. Again, because of that, there's no oversight. There's none. Although we're paying big dollars to have that oversight, you see what it costs for you to get your real estate license renewed.
Yeah.
But we got real estate licenses, and we have the NMLS license that has to be renewed at $300 every year to the Department of Real Estate, and then continuing it. All that stuff we got to do. But guess what? There's no oversight.
You
we
kinda
can yell
in
and
good
scream
faith.
and talk about these fraudsters until we're purple, but again, they're going to get away with it a lot of times.
Right.
It's not going to happen forever, but they're going to get away with it. And you just don't lose sleep with it. Just do your business the best way you can possibly do it because it's going to come around.
Right.
Because you're going to hear somebody, just do it this way. And there's the little angel on the shoulder saying, yeah, that's the right way. Then there's the devil saying, hey, no, let's go do that. Let's just do it. Let's make a buck right now. It's tough. You have those two little guys saying, one's pulling you this way, one's pulling you that way. And you're thinking, I need to make a living. It's slow right now.
Yeah.
Yes.
I've been tested a few times already about that. It's like it could look this way, but it's like I have to go to sleep at night. I can't do that.
You got to be careful of the corner cutting.
I sleep great, and that's because I know I didn't mess with anybody or maybe lied or what have you, because it just doesn't, it's not in our business.
Not good.
It's not a long-term move, if I should say.
I want us to, I'm sure we got another point to get to.
No, yeah.
So what you said there just really
You're up.
made me think of just how important, just what I've noticed being kind of fresh in the business is like what I've noticed, how important just your reputation and how you treat people in this industry in particular is something I've noticed. And I guess that's a huge part of it, where it's like we don't have that big oversight, to your point. So it's like it's like everybody talks, man. It's like you learn about all the players so quickly, and if someone's worked with you, it's like they pay attention, So it's like, if you cut corners, people notice, and it doesn't go away,
Absolutely.
That's a huge industry, but a very tight-knit fraternity, actually. So.
Yeah,
Yeah.
exactly.
You start to realize that when you go to the PCAR, like the Placer County Association of Realtors meetings and Auburn marketing meetings, stuff like that. It's just like those are the people that are producing, and you can tell there's just an upper echelon, and then you might talk to somebody else that maybe have part-time, and it's like it's just night and day difference how they project themselves.
Experience they've had, and the good ones are good too. You meet them, and it's like, and if they, it's like everyone talks well about them and all that, then it's like that's
the key.
They're just
That's the key. That's tough. But did you have any points you wanted to bring up there?
Yeah, I had a few. I was kind of going off the fly here, but I just had a few questions I wrote down earlier.
One I was curious about, I think was on your list of questions, was the comparable markets, like in terms of like what you've seen and how it's close to anything you've seen in the time of which.
Yeah. So, because we touched on 2008 for a second here, but essentially the way I wrote it down was, so being in the business as long as you've seen market shift. I'm sure, as you've already said, like 2008. So we all agree we're kind of going into a market shift now compared to the last couple years.
Not 2008, that's for sure, but definitely a shift.
But would you say this shift is comparable to anything else that you've seen before?
Pretty much. I was thinking about that on the way over here. 94 was a pretty big shift. It was after the fall of '89, and then we had a boom because the stock market was crap. And in the day that when the stock market would go down, people would go flight to quality, which was the bond market, and that would drive rates down. So we're not seeing that so much today. We're seeing, the stock market goes up, the bond market goes up. It used to be inversely relation,
Right.
But now it's pretty much the same thing, which
It's very weird.
It's weird. It plays with my head because it's like, huh? You know, because they're not looking at the bond market as quality anymore, and that's kind of frightening.
Yeah.
You know, I mean, I don't know if it's because of the debt or I have no clue. I can't even speculate on it, frankly. But we also, I'm looking at it strictly from a human perspective, from a customer perspective. Why would you buy a house now? Why are you being intimidated, or why are you slowing up? Why are you not pulling the trigger? Why are you sitting on the fence? Whatever analogy you want to use. I'm looking at it from, okay, it's kind of the big exhale, if you will. I mean, we had such a big, heavy-duty market, right? And that markets always are cyclical. It used to be on a 10-year cycle. You could just pretty much count on it. Every 10 years, boom, boom, boom. You'd have your little cycle, your business cycle. And if you look at business cycles, we kind of got screwed with. It started with in the early 2000s, because we should have had a recession. We should have had higher interest rates in the early 2000s. But in that whole ideal of, let's get the less fortunate into homes, they kept the rates down lower longer than they should have. And again, they had that over demand, not enough supply, same kind of thing, and then it kind of exhaled. That happened in 89. We had that big push, and then by 94, it was the big exhale. It's just, okay, people have to get back to I hate to use the new reality, but that's really what it comes to, because 3% market's very different than a 6% market when you're talking interest rates. So you do have kind of a new reality, if you will, but that takes time for it to sink into the average human.
Right.
I mean, it's like, you were going to buy a car 2 years ago. You could have gotten 0-0 on your car loan, right?
Sure.
Like, oh man, I'm waiting for that to come. Right now, I'm going to my car dealer and I want to buy that nice, whatever car you want to buy, and you're looking at 4-5% interest rate on a car loan. You're going, no, I don't want to do that. So it's being seen all the way around. For the car industry, it's at least letting their inventory pick up. Our inventory, we still have demand. We still have the pent-up demand, so it's kind of trickling down now. That pent-up demand, that's why when you're staying your figures in January, what happens in January seasonally is what people do is you market all, you see the market start slowing down into September, right? And in October, because in the wintertime, it's always been November, December, January, February, the crappiest months of the year for real estate. Always. Yeah. Just always. So what happens is you start marketing in November and December harder than ever, right? And you get someone that wants to list their house. And they're going to say, nah, I'm going to wait till after the first of the year. So guess what? After the first year, what'd you see? A whole bunch of new inventory come on the market. So and then those people that, just casually waited through the holidays, they look down, they say, all right, that's the house I want. And then they pull the trigger. Then once that final little bump of demand goes down, is what you're seeing right now. It's just slow. It's going to take a minute for that to turn around. And I'm guessing you're going to see it start picking up seasonally. The end of this month and into next month, because we're in a seasonal market now. We haven't been in one for years. I mean, last time I saw a seasonal market was probably in the 90s. So because it's just everything economically, it's just been screwy. And it's focused was on the real estate industry for so long, and the mortgage industry, the 08 stuff and all this garbage, blah, 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 blah. We're making money on real estate. It's kind of going like this right now. That whole verber, if you will, is just kind of calming down. You don't hear people talking about it like they used to.
Right.
So, you guys are talking about it. You guys are keeping it up. That's exactly what you need to do. You need to keep talking about it. Talk about the success stories of the people that have done very well in real estate.
Yes.
Because let's face it, anybody that you look at in the United States that are on the upper echelon of the wealth pyramid,
Real estate.
it's real estate. That's all. Their majority of their wealth is real estate.
Quoted, but I think I saw some statistic where it's like, what is it, 80% of millionaires or most of their net worth is from real estate or from properties or something like that.
Tangible asset, you can't really beat it.
Might be wrong, but I know it's a majority.
Yeah. I mean, right now I'm looking at, I could retire, but I'm looking at retirement as 5 years in the future. So I'll be bored. I got things to do, so I can't retire. Yeah. So
keep working with me.
Yeah, exactly. I want to make him. He's going to be the best of the best. But so I looking at real estate. I own real estate. That's all majority of my retirement fund is pretty much real. Of course, that's my passion. I know real estate.
right.
You know, if I was a stockbroker, I'd probably have a bunch of stocks, but I really, you know. So real estate and notes is where I'm carrying my wealth going into this. And hopefully that also carries over to, which I'm really scared about, don't even want to really, is the digital currency change.
Yeah, we brought that up minorly on a previous cast.
That scares me.
That's a can of worms that I feel like
It's scaring me because
no one truly understands.
because you want to talk
CBDC.
about change. That'll be change that you haven't seen yet because they're not going to need us.
No.
You know, I don't know if you ever watched a show called The Black Mirror.
Oh, yes.
Yeah.
Great show. Scary in a lot of regards. The social credit score one's still
maybe
weird
one
me
or
out.
two of the first like season, but yeah, was there a particular?
There's one in particular one that just, I mean, it haunts me. It's about this gal and
Social credit score.
social credit score.
Yes, that is
And
what we're in right now.
She comes in, she's standing in line to take a plane trip, right? And she makes a big scene, and all of a sudden her stars start going down. Then she can't get on the plane. Then her stars are so low she can't get on a bus. And it's just like, I'm looking at this
It's just a
going,
trickle.
oh, and the way it goes, I'm frightened that that's the way our society is going.
Right,
you know,
right.
from this whole credit score, you can take it to a social score, which is more than just credit. You've got credit, the way you hold job,
Carbon
everything.
footprint, maybe.
Because they can start I mean, if you had digital currency, they could see everything that you buy. They could say, okay, you're a Starbucks user. You go every day and you buy that $5 cup of coffee. Bad boy. Anyways,
Bad boy.
but that lowers your social skills because you're not smart with your money. You see, because somebody arbitrarily could say, you know, that Starbucks coffee is not a prudent way to save money. If you would do that, you'd save yourself $250 a month if you just do the math.
It's like, who's deciding that? That's really the scary part. Right.
That's the problem. That's what worries me.
Judge? Yeah.
Yeah. So, but I don't want to go that way because by that's the time I say.
I almost did
That's
the
when
other
I say I'm
time.
retired. I say I'm done at that point.
Yeah,
I can't, you know, because my social stars will be down to none. That
even
guy,
be
no.
Got to start hitchhiking.
No, not that guy.
Social good.
That's right.
He states his mind. No, don't let him.
No Starbucks for you.
Yeah, no Starbucks for you. Yeah.
Yeah, the carbon footprint one weirds me out. It's like you drive too much. You can't drive today, or you travel too much for business. You can't hop on a plane today. It's like they've actually talked about that at the World Economic Forum about carbon footprint detection, and that scares the shit out of me.
It's like it feels like the government or maybe us as people are rushing to create metrics to divide us or to create like camps of like
Done a pretty good job so far.
They're doing a damn good job of division right now.
I think we're self-sufficient at it now, which is the problem. Where it's like
We're self-sufficient.
yeah, it's just like
We're really good at it now.
Footprint. Who it's like who cared about that? You know, just so not even that long ago, where it's like that's so on our conscious, where it's like any metrics you could feel virtuous in is something that we're
Started with social media. I mean, social
because
media.
you can broadcast it. Yeah,
Yeah.
exactly.
Likes, followers to him. I saw it on a podcast, and a woman was saying that I wouldn't even talk to a certain person if they don't have a certain amount of followers. And I'm like,
Wow.
what? How is that at all a characteristic that you're looking for? It's like, to me, for me, if you were like, who knows? I don't know who you are, but maybe if you were like a social influencer, that would stress me out. If like, say it was like my girlfriend, it's like I would have to deal with that all the time, like
Right.
publicly.
Got to get your numbers up.
Yeah,
babe.
Yeah, babe.
In a sense, we're kind of there right now, aren't we? I mean, if you guys want to use somebody or use a service, what's the first thing you do? Google it.
Yeah. How
Yeah.
many stars they got? Oh,
Yeah.
Yeah.
4.5.
Yeah.
Hey, we're at 4.6.
Or you buy a product. You go to Amazon. Every product's got a. I mean, I don't care if you're buying freaking shoelaces. You're still going to look at. Oh, geez. So Joe Smith in Iowa said that these shoestrings they break after like 40,000 wearings. You know, I mean, you read them.
Right.
You know, you read them.
It's something,
Right?
To us, it's
So-
valuable. It's like a social, it's like a social credit to it. Yeah. So I mean, say that again, but yeah.
Well,
Everything's hierarchical.
Yeah,
It seems to be.
our day was, hey, is that joint good? Yeah, it's good if you like this, this, and this. Okay, I like that, and that. Let's go. All right, we're there.
And then you create your own thought on it too, which
Yeah.
is a good thing.
Then you imprint, okay, well, that had, oh man, the tacos at that place were the best. Oh, that was great. Or their enchilada sauce, or, I mean, I love Mexican food, if you can't tell, but so
Yes, you do.
I go through and it's just the way it used to be. Now it's, okay, well, I'm not going to go to that one because somebody gave it a 1.
Right. And it's like, but if you've been there and you've tried it, it's like, I feel like we have this pressure on us now of more social validation of like,
If you're sitting in
these people are saying they don't like it, then there must be something wrong with my.
If you're sitting in a restaurant and you're doing this on like Yelp or something, and I'm a server, I'm going to say,
Like, this is what I just did.
Yeah.
no, thank you.
So I saw this. Am I going to have to expect this in my meal tonight? A hair, you sick.
Well, yeah. I mean, real estate's there right now. I mean, if you got a page or something, you're fishing for those stars, are you not?
Yes.
Yeah. Give me a good review. Put it on Google. Put it on Yelp.
Testimonials.
Put it on whatever else medium out there is. So yeah, we're all begging for them right now, which is it's not good. We need to beg for our clients' best interests, not.
It's
Their
getting a little
star,
too flashy
not
out
their
there.
rating. You need to do your job.
And there's little companies that will actually, you can pay them to give you a certain amount of positive reviews.
Yeah.
Which that's ridiculous.
Fake.
But that goes to show you that is important to the majority of people, seeing some sort of social
Padding it.
credit score or social type of validation of proof, if you will.
Right.
Like, they're good because they have a lot of reviews.
In the real estate business, I simply ask one question. How long you been doing it? That'll tell me a lot,
Yes.
because if you've been doing it for 1 year, you're green, 2 years, probably still green. And I'm going, but I like that green. You know why I like that green? Because I've bought and sold houses before. I know what it takes. So this guy's got all the energy that I no longer have. So I'm going to feed off of your energy. I'm going to help you, but I'm going to feed off of your energy. That's just similar to the way my hiring process is right now. It's like, okay, I got to hire people my age all day long, but you got a bunch of, stuffy old 50-year-olds sitting around that too tired to go out in the field and knock on doors and call people and everything else. I'd rather have, the 20s, the 30-somethings that are just out there ready to make the world, but controlled, that are not controlled in a negative sense, but are channeled is really where I'd say channel their
Professionally.
efforts. Because if you can take the shotgun approach to any kind of marketing, just go do it all, right?
Right.
Or you can go, okay, I'm zeroing in on this. This guy is my service. He needs my service, and I'm going to show him why he needs my service. Need.
Yeah.
That the old IBM sales techniques that we learned when I was first as a loan officer. I remember one of the regional managers gave me this box of cards of stuff, and it was the IBM sales course, and it was a big deal in the 80s, the IBM sales course, because they were selling computers and electronics and all that, and they had to do it, had to have the spiel. So they had this whole thing about need satisfaction, establish the need and then satisfy that need. That's the best way a salesman can work. So I've taken derivatives of that my entire life and put it into practice, because let's face it, you're not looking at a house to find out the price of tea in China. You want to know what's in the house, is it for my family, and that kind of thing.
Right.
They're not going to ask you questions about that. Price of tea in China. They're going to look at the house.
Yeah.
So the person that does the research and understands their product and has the knowledge of it and is willing to go do it, that's 90% of it. Willing. Are you able and willing to go get that information for me?
Right.
And if I see that in you, you're going to win.
I'd say that goes over to
And that's
origination,
human. That's human nature. And people look at human nature now as, oh, I'm sorry, I might hurt your feelings. I don't give a damn about your feelings. I need this product. I need this service. Right? I don't care about your feelings. You're good.
Yeah.
I'm sorry if I hurt your feelings, but you know what? You're good at what you do. I don't want feelings to get involved in it. It's business. Business is different.
Right.
Personal, we'll talk personal all day long. We'll joke about whatever we want.
Sure.
But business, focus. Let's stick on
We
that.
have a goal.
Yes.
We both have a goal. We both want to get there. Let's do what it takes. Yeah.
Yeah. And today, you know, people are letting feelings get involved in business, which has no business, never has been. You know,
I've been seeing that
because
a lot.
because
Even lending.
what feeling does your pen have? I want to buy that pen from you. It has no feelings.
Not much. No.
No, right?
You can feel it.
Yeah.
I'm not going to hurt its feeling if I say, God, it's a god ugly, awful, ugly color of blue it's on there.
Right.
I hurt its feelings. No, but I'll buy it for you at a discount price. See, I'm going to switch it to business.
Right.
You see, I'll buy it because it's god awful color blue. I'm going to buy it from you at a discounted price. You see, you can use that feelings thing to your advantage, and your clients should be able to see that too, especially in your guys' age group, because that's a big deal. Because business, you know, I'm not saying you're not cheating, you're not stealing, you're being completely, totally honest. That's an ugly color of blue. That's about as brutally honest as you can be.
Yeah.
Right? So
That's how you really feel, and it can come off as a negative.
No.
Your willingness to.
but that's part of my negotiation.
Yes.
Get the best deal for my client.
Yes.
That's our job, is to get the best deal, the best loan, the best for our client.
I've always loved what feels like works for me is just the middleman, like messenger approach, where it's just like still being brutally honest. It's all business negotiated. Listen, the client doesn't like this. We think this is this, and this is this. So I'm just telling you, this is their offer.
How can we make this work?
That's exactly like, how can we all win here? What's your take? What is your seller?
What does your seller need? This is
yeah.
what my buyer needs.
Exactly.
Let's make those needs connect. Yeah.
And I don't, and there have been situations where I've run into, you know, working with agents on the other side, or just people in certain takes, and they can get very emotional with stuff like that. And it's like, why?
It's tough to talk to them when it's like that, because it's simple. It's like you're a fiduciary duty is your client to give them the best possible outcome for their purchase. But the problem is sometimes they get there. Who knows the type of? It always seems to be when they've had a difficult seller. Yes. Or it's been on the market for a while, because it's really difficult to maintain a relationship, especially if it's not selling.
Yes.
It's just, that's tough. Yes. So yeah, it's been getting more and more emotional lately as the market has shifted, I would say.
Yes.
Because everyone was happy-go-lucky, business is great and all that. Now it's like, what's going on?
Yeah.
This isn't my fault.
Well, if you started the business 2 years ago, the seller would tell you what they wanted to list the house for.
That's, yeah.
Right? Oh,
They're
well,
still
this is $1
trying.
million house.
Sure.
We'll list it for it, and people are going to give you bids on it, and it's going to it's going to mark itself to market. Nowadays, as an agent, we have to do our jobs. We actually have to find the comparables. We have to find trends to your neighborhood, all that kind of fun stuff like we used to do. We have to work.
Provide value, provide tons of value.
Exactly. So,
I feel like as young guys, we just have to go above and beyond, provide that extra bit of just like grr, or that extra bit of like, I try and make a point to be the smartest person in the room. Most of the time, I don't think I am, but who knows, maybe I am, but I try to be. And I know you are big on preparation. You want to be as prepared, and whatever question they have, you want to be ready for it. And if you're not, you're going to call that listing agent faster than you can even say what.
Yes.
Because I know you.
Yes.
Because you're hungry.
Yes.
oh, no, that's what you're supposed to do. When your client's got questions, you want to get the answer to them as quickly as possible. And then that's where the answer is. You do what you do. Yeah.
Exactly. If I have to call you and it feels awkward, or I have to do this, or we have to have this tough conversation, like, let's go.
Let's have it. Yeah.
Dial.
It's tough having a hard. It's difficult having those conversations, but you got to do it.
Yeah.
You got to do it. It happens to all of us.
It's the beauty of the industry, as my mentors and everyone I work with say. There's never a dull day, right?
No, there's not. There's not.
The only dull day is the one you make.
Hey, I like that. I could put that on a poster or something.
Well, Sam, I don't know if you have any more questions. This has been a really good one. I think we're over at
What are we at?
We're at about an hour 20 right now.
Wow.
So we've just been flying, which is great. When you lose the sense of time, that's how you know it's been
Cool. I guess like it would just probably be the last couple if we were to ask it. If you want to,
yeah, we can do. I've got a few. I've got one that's a little more personal, just because of father-son relationship of the industry.
Oh, here we go.
This one's a little tame. I might actually have a better one after this. But how do you feel about Sam, your son, being in the business?
proud of him.
Yeah.
Proud as hell. Yeah, absolutely. Because I know this business is one of the toughest businesses you can possibly be in, especially at a young age, because the average age of a loan officer is like 53 years old.
Yeah, we were talking about
So-
this on
so-
too. Yeah, yeah.
Because I was in his shoes when I was young, and I vowed I'd never let another guy or gal or originator of any sort go out in the field without any kind of training. And I know that it irritated him, and it irritates most people because they get all their licensing, they're ready to go, they want to go, and then I give them like 4 to 6 weeks of just intense training with homework and everything else, and situational
no joke.
situational stuff that's going to happen to them, and then we role play and all of that stuff, so we can get them to the point to where, okay, he's better off coming out of a 4 to 6 week training than a loan officer that's been doing it for 2 years.
Yes.
Even though they've been raking it in the last 2 years because rates were at 3%. That's easy money.
I remember
this is where the professionals come out right now.
I remember when I was doing my per diem interest at like 2.5% at 15 days. Like, remember when you had me doing the closing cost sheets by hand? Yeah, those are the days.
I mean, that's such a gift though, because it's like I in a sense,
In hindsight,
getting close
definitely.
to 2 years, and like it feels like it's just been day by day, week by week. I have mentors that I learn from, and they really teach me. But to have that resource of just sit you down, let's get through this hard 4 to 6 weeks. But I mean, it certainly paid off, because I mean, Sam's very impressive with his knowledge. That's one thing that I was impressed with when I first met him, is just he's at his age, he just knows so much, it seems. So yeah,
A little osmosis going on there too.
Yeah,
He grew
I
up
think
around this stuff,
I'm starting to learn from the source too. So that's amazing. Yeah.
You tend to, what's the saying? You tend to, I guess, assimilate to your environment and surroundings. It sucked during it.
Yeah.
But it was very evident when I started going out and talking to people in terms of knowledge out there, common knowledge. And it, thank you, because it paid dividends big time. It was huge.
And I'm second generation. My dad was in the business as well. So I took what he didn't do, and it was different when we were kids at my generation. Getting a hug from my dad was just like, okay, did someone die in the family? I mean, it was that,
Right.
men
Different
and son relationship was not, lovey-dovey like it is nowadays, but
Different times.
totally different times. But so he basically was tough love me. Oh, you're in the business, kid? Go for it. Learn it all on your own. It's the best way to do it. It's the way I did it. It's the way you have to do it.
Right.
But later on, I then got the opportunity once I became a banker and I really knew my stuff, and I could ask him questions of historical, like we're doing now, how did the mortgage-backed securities come around and those kind of things. He actually wrote a book on it. So it was.
He wrote a book on it?
Yeah.
I didn't know that.
Yeah. Yeah. Next time you go over to your grandmother's house, check it out. She has it, I'm sure. So
I'll have to read it.
There you go.
But yeah, I mean, it's all antiquated now because he wrote that in the 70s, I think it was. So that was all. I mean, literally at that time, he would take a mortgage-backed security and he'd have these banker's boxes, and he would get on an airplane with a pool of loans, which is, at the time it was $1 million worth of loans,
Wow.
principal amount.
million.
And they would get on the plane, fly to New York, and find someone that would buy it, out of their Wall Street connections. Wow. That's literally physically the way mortgage-backed securities started. Yeah.
Holy moly.
Yeah. They would say, I got these loans. This is the average interest rate out of all these loans. You want to buy it? And then they would buy it, and then they would sell it. The way servicing works is that you either sell it serviced released or serviced retained. Serviced retained means that you're going to collect the mortgage payments from the clients. And then a mortgage, but you need your money back, right? If you lend out $10 million, I mean, you got to pay everybody, right?
Right.
So I got $10 million and I'll lend it out at, today's world at 6%. My average pool is say 6%, but Fannie Mae's at 5.5% on their coupon. So I've got a 0.5% spread. So I'm going to keep that as a servicer. Fannie Mae, I've got to pay them 5.5% every month. So on the backside of this thing, there's a lot of, money coming in here, money going out there, and then they keep the little bit. And that's how servicing works. And
Right.
that all started from those days. So it's interesting to find that out. Yeah.
From after the consumer closes on their home loan, a whole new journey starts with that thing.
Right.
It's so interesting, but that's where it's cool to be able to have him, because I still, like, we had an hour and a half long conversation just on, what was it?
Oh, yes. You had a loan officer on
Service-
some podcast you saw that was trying to explain servicing, that it's going
Service
to
relief.
cause a problem because interest rates have gone up. I go, it doesn't make a damn bit of difference because the spread is all that matters. To a lender,
Servicing rights. It was essentially what he was trying to say is that there's going to be an influx in these servicing rights being sold out because people were retaining them, and that's what we're keeping the lights on. But at the end of the day, everything's different per lender, what bank they sell to. So it's like they're trying to say there was going to be an influx of these to come into the market, which is going to have an echo effect on the consumer side, which it's not that black and white, because why would they be selling at 3.5% rate where they're making month over month, they're guaranteed and they're continuing. It's essentially like they're selling that 3.5% payment to someone else to take care of, and they get an upfront fee for it.
Right.
Instead of retaining it on their own. But why would they do that if they know that residually they're receiving that every month?
and that 3% loan's less apt to pay off than the 6% loan.
Right. It's so you're going to maintain that.
So you're going to have the spread longer.
You're not going to have it paid off.
Right.
Whereas a lot of these lenders are probably going to have within 2 years, the majority, like 90% of these loans are probably going to be wiped off.
Nah, don't.
You don't.
I don't think rates are coming down to that level again anytime soon, frankly and honestly.
I think people will still refinance at a point where if it's like even just that 0.5% difference, because I think
people do. Yeah, if you can save a couple $100 on your mortgage payment, why not?
That's let me spread it out. Next, maybe let's go back. Maybe 5 years. There's going to be a good amount of the loans that we've been writing in the last 6 months may or may not be paid off.
Well, that's the way we live life. It may or may not. Stock market may or may not. Real estate values may or may not.
That's the tough part.
It's the great gamble.
Yeah.
But with all honesty, I mean, if you kind of see why rates were low in the first place, and
Clearly
why they had to
evident.
come back up. So, I mean,
Yeah. I just cannot stand. I've talked with Chris multiple times about it. I just cannot stand when people try and actually predict the market, because you can't. How are you supposed to? And you're trying to sell a loan premised on refinancing within a certain period of time. That's bullshit.
I can predict the market.
Can you?
Guaranteed.
What's all right? July. What's the rates going to be?
No, not that way. I can predict the market's going to go up, the market's going to go down. Guaranteed 100%.
What goes up must come down, right? Down.
And it's up and down. That's the guarantee. The market's going to go up, market's going to go down.
The only one, huh?
Yeah. And if you look at long-term trends on any market, it always ends up higher than it was. That's simple.
On average.
Yeah.
Small incline.
I mean, speaking about going up, was stock market. I'll give you a classic. When I first got in the business, stock market was at 3,000, and that was high. That was the Dow Jones Industrials. Yeah. Wow. Now what are we at? 33, and people are crying. 31. It's 1,000. I mean, to me, I'm like, whoa. Yeah. So yeah, there's a big.
Yeah.
That tells me a lot about our society. We basically devalued ourselves so much that's where it's gone. Because it's all value of the dollar.
That speaks a lot of volumes, actually, quite a bit in terms of because naturally we've had inflation over the last few, forever. Forever we've had inflation.
Well, the Fed's always said we want to keep
devaluing ourselves.
Fed's always said their policy since the early 80s is want to keep the inflation around 2%. So even 2% is still an inflationary number, isn't it not? Yeah. So 2% over the last 50 years, well, yeah, do the math.
Yep.
No matter what, eventually.
Yeah.
Yeah.
But I think the average is higher than 2% for inflation over the last 40 years. So probably.
Yeah. But I guess, do you want to ask the last question, or do you want me to? I'll do it. All right. So I figured we can wrap it up with this question, but it's kind of a two-parter. Qualities that make up a good loan officer and an agent. Let's start with an agent.
Agent be knowledgeable of the product and the environment around them. And most of all, the most important part is what I already touched on it. be willing to work for your customer and go that extra mile. Keep them informed. That is the number one customer service, even if you don't know everything. We don't know everything. You're fooling ourselves. Even the agent, I've been in the business 40 years. I know enough to know that I've forgotten more than I know now.
Yeah.
So, I mean,
He knows a lot.
anyways, but no, just it's that enthusiasm, it's that energy, it's what your clients see and feel from you. Is more important than, well, that 3-bedroom 2-bath house. Well, it's that's great because they're going to buy a house more on emotion than they're going to buy it on anything else.
Right.
Whereas a loan officer, they're looking at two things, only two things. What's my payment? How much is it going to cost me? That's the two things they
Payment
care
cost.
about, really.
Right.
From a loan officer standpoint, how much is it going to cost me to buy this house? What's my mortgage payment going to be?
Simply.
All that other stuff we have to do, like verify this and verify that and do this and run numbers and blah, blah, blah.
That's just in the middle.
It's all noise to them because that's not their job.
Right.
We may tell them, hey, we need your bank statement because we need to have 2 months reserves. That means nothing to them. What's my payment? How much is it going to cost me?
Yes.
That's all they really care about.
Yes.
And how quickly you can get them to. That's like a car dealer. You go to a car dealership, and the first thing they do is you say, well, what's my payment going to be on this? And they show you like a 7 or a 10-year loan on that thing. And they're not going to show you the 5 or the 3-year loan because that's payment's too high.
Yes.
So
they want to show you the nice one. Yeah.
exactly.
The nice one. Yes.
Exactly. So we know, obviously, the payment range is going to be relatively the same between loan officers because the rates are the same. We all have to go to the same well to get our water.
Yes.
And it's how well, no pun intended, but how well we actually can communicate this to our clients and gather their trust, if that's even a thing in today's world. But I mean, someone that's going to give you their social security number and allow you to run their credit report, give you their bank statements, give you all their financials, show you their pay stub, where they work, how much money they make, how much they pay the IRS, everything. They show us everything.
Right.
You better trust that person you're giving all that information to, right? And where they're coming from, because you start giving that information out just because they're licensed doesn't mean they can't steal it.
Yeah.
Right?
Yeah. Seriously.
So I mean that's a big thing, and that trust issue has to come into play, and you can't say you got to trust me. It's like the
Almost you
government.
trust them
The
less when you
more
tell
somebody
them.
says you got to trust me, the more you're going to go the other way, right?
Kind of like when you say you're a good guy. Like, I
yeah,
swear
I'm such a
guy.
good
It's like,
guy.
you're-
Yeah, that's a classic. I'm a good guy, really. Yeah, well, okay.
No,
you
you're
just
not.
con people out of this and that and so forth. Yeah.
You're really almost highlighting what's missing. It's like, well, I wasn't really thinking about how much of a good guy you were before, but now that you keep talking about it, it's kind of questionable.
Yeah, I
You're
know,
kind of
right?
like, now it's on the topic. Are you a good guy?
It's like, trust me,
Yeah.
I am a good guy. It's like, well,
Yeah, but it never once in their mind because you just showed them. Don't tell me, show me.
Yeah.
That's really the key right there. Don't tell me I'm a good guy. I'll show you I'm a good guy. I'll prove it
Right.
20 times over. So that's really for any salesperson. That's really what you have to do. Shut up and listen. That's number one thing. Listen to your customer. They'll tell you what they want.
Right.
They'll tell you what they want physically. They'll tell you what you want with body language. They'll tell you
Right.
lots of things. You got to pay attention to what's really the vibe. Like you're showing a house. You show a house to a young family, right?
Yeah.
A mom, a dad, and a young child, right? They walk into the house, and the kid starts jumping on the sofa, right? And you're kind of going, oh, it's not your sofa to jump on,
Right.
How do you react, and how does the parents react to that? I know it has nothing to do with the house now, does it?
Right.
But how did you react to the situation? They're going to judge on how you reacted to that situation.
yeah.
So everything as a salesperson, we have to be very concerned about on that because our clients don't have the same ideals that we do. It might be fine for the kid to jumping down on their couch at home, not so much on somebody else's house where you're having the opportunity to show the house to them so they can hopefully purchase it if they like it. So, there's a lot more to it than just, okay, this is a 3-bedroom, 2-bath house. It'd be perfect for you. It's in the neighborhood you want. It's the price you want. It's the payment you want.
They're looking at your character.
Absolutely. Because you can't fake that.
Yeah. Yeah.
You really can't fake it. So,
Yeah. I think I would say, just moving off of that, would you say, in terms of like the best tips to give to say me and Chris or anyone that's younger in the industry, which unfortunately they're kind of slowly evacuating out of the business because it's getting hard. But the people that are still lingering, what tip or tips would you give to either us or Chris or somebody else?
The biggest thing I would say is stay the course. Stay the course that you know is the right course. And you stay that, you maintain it, keep your morals, keep your integrity, keep what you know is the right way to do business. Stay the course. That goes for loans, goes for real estate, goes for just about anybody that's in a tough market. You stay the course. And then guess what? Everyone else who falls out of the business, the cream of the crop always floats to the top. Always.
Right.
So if you guys want to float to the top,
cling on.
you'll be there.
Yeah. You're able to cling on. You'll rise up there with the tide when it comes back.
And don't be afraid to work hard.
Yeah.
Work hard, long hours. That's what we do.
Yeah.
And it's not work. It's a lifestyle, really.
Yeah.
I mean, my whole family grew up with, we go to Hawaii like once a year, right? And then, they would know that I get up at 5:30 in the morning because it's 8:30 here. I'd be on the phone until about noon. And then after noon, it's 3 o'clock here. Things slow down. We go out and play. And, that was, they kind of knew that was the way the family had to do business. The whole family was on board with it, but they didn't know they were on board with it. 'Cause they're out running around playing on the beach or doing whatever they're doing anyways. I might be in there working. I'm not playing Frisbee with them right at the moment, but I'm having to do the necessary things that I need to do to maintain business for my employees, my customers, my clients, all the way down the line. They say it starts from the top, and it really kind of does. You have to kind of show that. Don't tell me, oh, I'm so good, I work all the time. Show them.
Yeah. Yeah.
If you're working harder than everyone else, it's intoxicating. People want to be around people that are successful, that are hard workers. They want it to rub off on them. See me at 50, I want to be around you young guys because I want some of that energy to rub off. If you could bottle and sell that stuff to me, damn. Now I'll market the hell out of that and be a billionaire.
That's right. Yeah, I appreciate that. I mean, I think we always kind of need some reaffirming on that, just because it gets tough in our business, and it's been slower, and we're hanging in there. We're doing well. We just closed one. You're working on one still, and I think it's just staying the course, being positive, staying with people that you like, and associate people, and be true to yourself. And I think in terms of tips, sounds like trust. You can't communicate.
You can't make trust.
Yeah,
Either you're a trustworthy human being or you're not.
You can't. That's not really.
I think both you guys are. I'm a pretty good judge of character. I can see it right. I mean, obviously, I know he is, because I know
a little biased.
If he messes up, I'll kick the crap out of him. Yeah, exactly.
I was raised right. Yes.
So yeah, there's that. But no, I mean,
That's fantastic.
but you can pretty much tell from. You get to a certain age, you can definitely tell a person's character within the first 5 minutes. Easy. You can tell the way they carry themselves, the way just body language, everything. And it's, it comes with experience. It comes with age. God, I hate age. That's a terrible word.
Yeah. Mid-20s, I'm feeling old over it.
No. Wait till you see me stand up. Then you'll say, oh, no, I don't feel that bad.
Well,
Anyways,
Dad,
but that's what I think. Just stay the course, be honest, be true to yourself, and just work hard. And if you just continue to do that, there's nothing that you're doing right now that's wrong.
I feel like the more you talk, you start to realize, and talk to more people in the industry that's killed it and are currently killing it. It's like there's no secret sauce.
They've just been at it.
They've just been at it for a long time. You're crazy until you get there, right? So it's just like, yeah, I really appreciate that reaffirmation.
Friends, family, and past clients.
Yeah.
You'd be surprised how deep tentacles that is.
Yeah.
If you really I remember the day I tell all my loan officers, I want you to write down everybody you know. And I mean, if you got married, I want a wedding list. That's a good one because you just invited everyone you really give a shit about, right?
Right.
So they all come in.
That's a good one.
And then you market to all those people.
Yeah.
And you market to them differently because, you got people my age. Hey, you know what? You're going to be 62. Let's market to you for reverse mortgages because you have to be 62 to get it. Or the young people. Hey, first time home buyers, know your audience, know who you're targeting, know who you're talking to, don't just shotgun approach it. And people appreciate that.
Yeah.
Because they can say, oh, you're in your 40s, you're raising kids, they're going into high school, and there's a different phase
Right.
of life for everybody. And if you can identify with those phases of life with your customer, you'll identify with them. And you can understand their struggles. They're trying to raise 3 kids and, they're all under the age of 5. You're like, you have no clue what that's like, but I can guarantee you it is not,
Different
it's like
frame of mind,
herding
for sure,
cats.
I would imagine.
It's wild. We had friends, the Jay Bushes, we had friends that raised 3 kids are all under the age of 5 at one time. He doesn't remember because he was all under the age of 5 at the time too.
I was.
But,
I was.
It's just learning those people,
Right.
and being able to talk the talk and walk the walk with them and understand what they're going through. Even though they may have money, it's a struggle to get there, as you well know. It just doesn't come unless you inherit it or steal it. So
The rest of us are left with
Working.
like you said, trying to be trustworthy and working hard for it. Yeah.
Yeah. I think it comes natural. I think trust, as he was saying, it comes natural.
And I always say, do unto others as you'd have them do unto you. The golden rule.
Yeah.
And if you know that and you live your life by that, it doesn't matter who's sitting in front of you. I don't care if they want to use pronouns or if they want to, do this or that. And it doesn't matter. Treat that person the way that you would want them to treat you.
I think that's
Doesn't
a good way to
matter.
end
That
that.
doesn't matter what color, race, religion, color, sex, marital status, national ancestry, street, nothing.
It doesn't matter.
All the same.
Right.
All the same.
Beautiful.
And if you do that, you live your life that way, no one's going to hate you unless you hate yourself.
Well, hey,
I mean, that's the best we can do. That's fantastic.
Yep.
I think that's a good way to end it, I would say.
Top that, I don't think so.
No, I just want to say thank you so much for taking the time to come out. It was
Fun. I love talking to
pleasure.
you, the young guns in this business. Absolutely love it. Because if I can make this business any better, if I can leave it a legacy, I would. That's kind of my whole thing. I really want this business to stay good. There's any business, there's crappy people in it.
Yeah.
No matter what. I mean, you see it on the news. I mean, we don't need to go down that road, but I mean,
Another
be
podcast.
the good. Be the good people.
Right.
Be that upper echelon. That will serve you well in the long run. No matter what you do. If it's stay in real estate or if you sell widgets. Yeah.
Yeah. Staying good no matter what.
No matter what. That's
right.
True to yourself.
Well, thank you guys for tuning in to the Market Matters podcast. I think that's a wrap.
Absolutely.
All right.
All right, guys. See you next time.
All right. Thanks,
Have a good one,
guys.
guys.